Cathie Wood's ARK Investment Management sold more Tesla shares recently as the stock continued to fall amid investor concerns about CEO Elon Musk's $44 billion purchase of Twitter. Incorporated, the famous money management company, sold 10,035 shares in the Musk-led company, worth $8.08 million. Since Cathie Wood is one of Tesla's most prominent champions, investors were surprised. Tesla stock, which fell 20% in the past month, fell about 27%. But Wood recently raised her company's price target, according to Cathie Wood's ARK Investment Management. Tesla Inc. shares will double to $4,600 by 2026. The updated ARK model was released on April 14, which is more than 4 times today's price. So, why would it sell its stake in the leading electric car brand? Keep watching to find out. When it comes to Tesla stock's impressive price history and the effects of buying and selling over the past few years, one name, Cathie Wood, keeps popping up. Following the electric car maker's stellar first quarter earnings, Cathie Wood's ARK Invest sold more than $100 million worth of Tesla shares, yielding 0.64%. Tesla shares were sold for $70 million through the leading ARK Innovation ETF. ARK for 0.52%. ARK Investment, based in St. Petersburg, Florida, owns Tesla shares through 3 of its 6 actively traded exchange-traded funds, the ARK Innovation ETF. ARK, the ARK Autonomous Technology and Robotics ETF, ARK, and ARK Next Generation Internet ETF. ARK, before the forest, sold 10% of its stake. The 3 ETFs owned 1.31 million shares of Tesla stock, worth $1.15 billion. Bulls pounced on Tesla stock earlier this week when Musk refused to reveal the source of the money needed to buy it on Twitter. The electric car maker is not a party to the agreement, so ARK has been selling Tesla at a profit every time the price rises above $1,000 to buy Tesla shares in January, ending ARK's month-long profit-booking spree when the stock fell 11% in one trading day earlier. From this month, ARK Investment raised its price target for Tesla to $4,600 by 2026, up from a previous forecast of $3,000 by 2025. In March, Wood did the same, offloading more than $200 million worth of stock to instead spend on distressed stocks more recently, such as Coinbase and Zoom, and Roblox, which is down as much as 50% this year. 2 of ARK's funds, including the flagship ARK Innovation ETF, sold 52,335 shares of its largest holding company, Tesla, representing a stake worth about $57.5 million. While the 3 funds later sold nearly $147.5 million, according to the company's daily transaction reports. The sales came after Tesla stock rose more than 40% over 2 weeks, as the broader market recovered from the geopolitical sell-off and were Tesla's first ARK sales since mid-January. The New York City investment firm bought nearly 60,000 shares in mid-February, after the stock had fallen nearly 30% over the year. Although Tesla was ARK's best-selling stock, the company also sold roughly $21 million worth of 6 other stocks, including Vertex Pharmaceuticals and software company Splunk. As we said, it would replace them with a huge position in another major company, Coinbase, which it bought for more than $100 million during the same period, Gen Z gaming platform Roblox, streaming giant Roku, and former pandemic darling Zoom. Shares of Tesla, which were trading at about $1,104, are down roughly 12% from their all-time high in November, while Coinbase, Roblox, and Roku are down 19%, 48%, and 42%, respectively, for the year. So why is ARK selling Tesla shares again? ARK prefers to trade around stock volatility, buying when prices are low and selling when Woods believes prices are about to fall. She expanded on this by saying that we naturally take profits when we sense that analysts are overly concerned about a stock, including Tesla, because we know we will get another controversy-related opportunity to buy the stock at a lower price. Tesla owns about 9% of the main ARK fund, representing a $1.2 billion position, but that is down from the $2.3 billion stake in October, representing 11% of the fund. Some recent reports indicate that ARK Invest executives have chosen to offload some Tesla shares. However, such terms are deceptive. According to more in-depth coverage of the incident, it's a bit off the mark. Yes, the company sold a small percentage of its Tesla shares. But with only a few fractions of a percentage sold, the money remained heavily invested in Tesla, moving from 11% to 10% in the fund. Waiting, for example, does not mean that you will exit some market shares. It just means that you cut back a little for whatever reason. This does not necessarily mean that the divesting party is concerned about the stock's future performance. Cathie and her colleagues will likely use the proceeds from the sale to fund the purchase of new ventures with greater upside potential. The strategy, which ARK claims is focused on disruptive innovation, has been met with growing skepticism by Wall Street traders who are betting against the flagship ARK. The fund made more than $1 billion in January, surpassing its total of $941 million the previous year. The innovation of shorts in America is crazy, Wood said at the time regarding shorts. Scion Asset Management, the hedge fund led by investor Michael Burry, who predicted the 2007 housing market crash, was one of its critics. Late last year, Scion Asset Management revealed that it held $30 million worth of bearish put options on ARK stock. Wood first emerged as an extraordinarily prescient market analyst, thanks in part to her predictions about Tesla before the company's stock price soared in 2025 to a single stock split, and the subsequent strength and enduring power of an Elon Musk invention. However, after creating ARK Investment in 2014 and naming these revolutionary funds after the biblical Ark of the Covenant, Wood has gained a household name among investors. It's clear from Wood's early statements about Tesla that one reason she likes the company is the similarity between the two business models, complementary principles that led to the rise of both ARK Invest and Tesla. Both are based on the idea that rapid technological progress can lead to financial gains. Rather than focusing on a specific technology, they each have a varied focus and a broad stance regarding that concept. However, there is another side to Wood's early investment in Tesla. When asked about Tesla, Wood stated that she viewed it as a value stock, meaning it was trading at a discount to its fundamentals. That means Wood believed Tesla stock had a lot of potential to take off after looking at its earnings, revenue, and everything else, and it has done so over the past year and a half. Her early conviction that Tesla had a lot to offer the market was a big part of the reason Wood urged Elon Musk to keep the company public while he considered a buyback, and why ARK Investment made such a big bet on Tesla in the first place. Cathie Wood has made several predictions about Tesla's stock price in the future. Wood expected Tesla stock to hit $4,000 a share by 2023, when it was trading for a fraction of what it is now. Remember, this was before the 5-for-1 split. Thus, the equivalent stock price after the split was $800, which it reached 2 years earlier than I expected. The point is that analysis of transactions and interviews shows that Cathie Wood remains optimistic about Tesla's long-term prospects. First of all, this proportional sale amounted to 0.26% of ARK's total assets. Not much in the grand scheme of things. So just because Cathie Wood and her team swap a small amount of Tesla stock for other stock, for example, doesn't mean it's a bad thing for Tesla. It simply indicates that rebalancing to diversification offers more potential. In another place, Tesla stock also rose nearly 800% during ARK's ownership of the company. However, the majority of individuals do not believe that this level of growth will continue year after year. As Tesla's market presence grows, it's reasonable to expect the company to mature more traditionally. Ultimately, it appears from the interviews that Wood remains bullish on Tesla, according to Bloomberg. Corrections could be helpful, Wood commented after Tesla stock's recent decline. They keep us all humble. Walls of anxiety have been erected in the strongest bull markets I have ever seen. This is dedication. As the market season progresses, we expect ARK funds to remain bullish on Tesla, as they always have been, especially with new developments on Tesla emerging frequently. Will you sell your Tesla shares? Comment below.